What up, everyone? Welcome to Financial Education and Business. I appreciate you being here. If this is your first time here, welcome. If you're coming back for the second time, the third time, or however many of my videos, I hope that you've been enjoying and I've been dropping some good content. So we're going to talk about what's going on with the Dow, the S&P, the NASDAQ. Why are they down? What's going on today? Big news. China is kind of cracking down on a lot of ADRs and a lot of large corporations such as Didi, Alibaba, and for-profit educational systems. And also on top of that, we have the VIX that is going up, investor volatility. Investors are very fearful right now with the VIX up 9.78%, which is insane. The S&P is down, the Dow, NASDAQ Composite is also down over almost 1.5%. Trend. The VIX shows you if investors are afraid. If they're afraid, this usually goes down, and the S&P, NASDAQ, Dow often increase. But what's going on recently is a little confusing. The S&P is going up. The VIX, the investors fear index, is also going up, which is kind of strange. So the Chinese government is cracking down on a lot of their companies that are based in China. The S&P and Bank of Mellon China Select ADR Index, which tracks the US listed Chinese stock, is now at more than 1 year low. The latest leg of the slide has come as China has expanded efforts to overhaul various industries including food delivery, Didi, and online educational technologies to go from non-profit. Alibaba and Didi Global are among the companies whose stocks have been under pressure. But also I want to quickly show you there is this educational stock that is just dropping like crazy. Almost all the educational stocks is another one based in China have really been hit over 50-80%, but just been very, very volatile. Like this one was $100 like on January, February, and then now it's almost $2.78 a share, which is really scary. So why are the Chinese cracking down? A gauge of stocks of Chinese companies listed in the US equity market sank to its lowest level more than a year on Monday amid a new effort from Beijing to overhaul a range of industries. Shares of Chinese companies overall dropped on Monday after the government issued a new directive affecting online platform behind food delivery services and at online educational technology companies, with that industry alone valued over $100 billion. The Chinese policy changes for delivery companies call for them to make sure drivers earn more than the country's minimum wage and to ensure union access, according to reports. The NYSE listed shares of Alibaba fell 7% as the company owns food delivery services L.me. Monday sell-off extended losses from Friday that were ignited after the report that China was considering rule changes that would turn online educational technologies companies into non-for-profit. Educational stocks plunged and the Chinese Select ADR index tumbled 13%. That's insane. So with this happening, with also investor sentiment really weak with the VIX. Also with this Delta variant, I could see the stock market really just taking even a bigger hit, and the VIX continuously increasing, and the Dow, the Nasdaq really feeling investor weakness in the stock market, just kind of decreasing a lot more. So Beijing in recent weeks has launched a regulatory review into a number of companies, citing certain such as cybersecurity, data collection, and private and monopolistic behavior. Beijing's cybersecurity review of ride-hailing company Didi Global, just days after it launched its IPO on Nasdaq, has seen the shares drop by nearly 45%. So Didi is practically the Uber, Lyft, Instacart, gig job of China. They have a big market share. I think it was like 90, I think. A big market share over there. And China, I think, is just afraid that Didi might be giving out or capturing or holding too much of individual data. So practically the policymakers want to address quality, they want to address competition, they want to address the rising cost of education. But in a country like China, the policy can take effect immediately. That's what you're seeing in the terms of risk factors. So it makes sense because China is CCP communist country, and the government can just do whatever they want at any minute, and everybody's gonna have to go with it. And so because of that, that's why a lot of people are afraid when investing in Chinese companies. And we've seen crazy issues in the past, with example Luckin Coffee, who lied in their sales to the government when they filed their SEC form, and they now are at $2 a share. I don't even know where they are. So obviously, as you look right here, just all of the big companies, Tesla, Apple, Microsoft, Netflix, Spotify, they're all down 2%. Netflix isn't down too much. A lot of companies are down, and I think the fact that the Chinese are cracking down on the stock market, on the ADRs traded in the US, with the educational stocks being hit, the for-profit educational stocks being hit, the Delta variant being a big thing in the rise, because at the end of the day, I think the Delta variant is going to make a big impact, whether we see it right now or not. CDC Delta variant data, right? So I think that's going to impact how the US continues to open, and to see if it's actually going to be a big enough thing to actually make the stock market go down, go back to another lockdown and all that stuff. So last 30 days, boom, there's a little bit of down in the number of cases, 34 million. Once again, we're seeing a little bit of an up right here. Looks like we are down. This is the number of cases, daily trends, and the number of C19. They haven't yet broke apart the difference between like C19 and Delta variant. It's all just, I think, combined into one. I wish they would do that so we have better projected numbers. But yeah, so with that happening, with Delta variant going on, with China kind of cracking down on ADRs, investor sentiment, with the VIX going up and the major indices are going down, and also actually major indices have seen higher highs and very unrealistically, and they need to breathe a little bit. I mean, the Nasdaq has exploded so high that it's just unbelievable. So because of those cases, I can see the stock market just kind of taking a breather, and any bad news is just going to really impact the stock market, I believe. So that is my 2 cents. I'm gonna say my tooth. That is my 2 cents. I hope this video helped. If you have the same, if you're thinking the same thing, if you're prepping for it, tell me how you're prepping. I've actually sold out of some stocks to just sit on the side, see what's gonna happen. If I have to, I'll get back into it, but right now it doesn't look like a realistic market to be sitting in, especially in these times that we're in, where the stock market is just in this euphoric moment. But yeah, that is what I'm doing. Thank you for joining me. I hope this video helped. Also, just go ahead and leave a comment down there. Make sure you like, make sure you subscribe, make sure you hit that notification bell, so when I post more things on stock market, you'll get notified. Thank you so much for joining me. Have a great day.